Oh, good morning, afternoon. Actually, I guess it is afternoon here on the West Coast as well. Good afternoon to everyone across the U.S. If you happen to be in Hawaii or Alaska, good morning still. My name is Joe Swimmer. I am the executive director of the Episcopal Parish Network, and I am in Los Angeles on parish visits, just having visited with St. Cross and their rector, Rachel Nyback. It was wonderful to meet with her and to meet with some of our other members who are out here. If you have interest in membership, there is information in the message that I just posted to the chat where you can email us at info@episcopalparishes.org. But we are super excited to have you here with us today to discuss fraud, such important topics for members of vestry, for treasurers, for others who have responsibility over finances in parishes and in local ministry. Partnering with us on this session today are our friends at Chazin Company. We encourage you to find out more about them and to meet them at our 39th annual conference, which is coming up in Houston, March 6th through 9th. They will be with us, and I'm looking forward to having you stop by and greet them in their booth. There is more information about that in the chat as well. So without further ado, I am now going to hand it off to Jackie and get this started. So thanks so much again for joining us. And do remember to put your parish name where you're writing in from into the chat. Thank you.
Well, thanks, Joe. Thanks, everybody, for being here. My name is Jackie McLaughlin. I'm a CPA with Chazin Company. We're an outsourced CPA firm. And I have joining me today Karen Sprague, one of my cohorts in crime from Chazin Company. She's in business development, and we're very, very lucky to have Lisa Green from St. George's Episcopal Church joining us as well, so she can add some of her real life experience to some of the things that we're going to talk about today. What we're going to cover today is fiduciary responsibility and fraud. So that said, let me start by sharing my screen. So I'm going to ask Karen to nod or shake your head. Can you see this, Karen?
Yep.
Okay, perfect. All right, so we're going to start out by talking about fiduciary responsibility. So if any of you are vestry members, you do have something called fiduciary responsibility. And this is a concept that a lot of people hear about, and most people have no idea what it really means. So what we're going to do today is we're going to read all of the legalese, all about fiduciary responsibility. And then we're going to talk about it in a real world example or real world terms that everybody can understand. So the legalese is on the screen right now, and I'm going to look over there at my screen to read it. Vestry members are fiduciaries who steer the organization towards a sustainable future by adopting sound ethical and legal governance and financial management policies, as well as by making sure that the parish has adequate resources to advance its mission. And there's more. Fiduciaries have responsibilities to stay objective, trustworthy, responsible, honest, unselfish, and efficient. And they have a responsibility to ensure that the assets of the parish are not misused and to ensure that the parish has adopted and is adhering to internal controls. And finally, vestry members are stewards of public trust and must always work for the good of the parish's best interest rather than for the benefit of themselves. Vestry members have three different types of responsibility: the duty of care, which means they have to make prudent use of all the assets, exercise oversight to ensure the effectiveness and sustainability, demonstrate a greater degree of care than a person might give to his or her affairs. They have a duty of loyalty to make decisions in the best interest of the organization without their own personal regard, and a duty of obedience, which means stay compliance with laws, make sure the organization stays compliant with laws and regulations. So those are all the fancy legal words to describe your fiduciary responsibility. So what I like to do is take all of that legalese and put it in a way that everybody can relate to. So being a fiduciary is like being a parent. So anybody who is a parent or knows a parent knows that when you have children, every decision that you make is in the best interest of your child. If you have an opportunity for another position and it means a move, you're going to think about your children first. If you are out riding in the car and you're trying to demonstrate to your children that they need to obey the law, you might not speed like maybe you would if your children are in the car. When you're choosing where to live, you might be choosing a neighborhood that has better schools for your children. So everything you're doing is for your children. And that's what being a fiduciary is all about. When you are fiduciary for a church, you have to have that thought process and that care of being the parent for the church and guiding it along its road to ensure its sustainability and that it's adhering to laws and regulations and all of those kinds of things. So I'm going to give you a couple of real world examples of some good fiduciary responsibility and some bad fiduciary responsibility. So I'll go ahead and start with the bad fiduciary responsibility. This was a situation that I saw firsthand in my, as we like to say, in my previous life. And I was the CFO for a nonprofit organization. And one of our board members was a financial planner. And he came in my office one day and he slapped a bunch of paperwork on my desk and he told me to sign off on this, that he was redirecting some of our investments to this annuity, and I just needed to sign the paperwork. End of story. Well, I knew enough to know that annuities aren't always in every case the best investment, although typically they do provide some nice big commissions to the financial planner putting you in the annuity. And I also knew enough to know that it was not my position to sign these papers. It was the investment committee's decision to decide if we wanted to invest in this particular instrument. So anyway, this board member who was the certified financial planner, I respectfully told him that he would need to go to the finance committee and talk to them about this annuity, and it would ultimately be up to them. He proceeded to continue to bully me for about 2 weeks, continuing to come into my office, threatening me, slapping papers on my desk, telling me I needed to sign these papers. What eventually happened is, because I wouldn't give in, he had no choice but to go to the investment committee. And essentially they voted not to invest in this instrument because, in fact, my gut was correct. It was not a good investment for the nonprofit, but it was a very good investment for the board member who was going to get a pretty large commission off of it. That's an example of bad fiduciary responsibility. This particular board member was using his position as a board member to increase his revenue. Very bad example of fiduciary responsibility. Now we can contrast that with another example, the good example. We had a nonprofit, and this was a client, a nonprofit who lived in a their office was in a very expensive urban area, and they needed to secure parking for the people who worked in their office. And because it was an expensive urban area, parking was not inexpensive. So they went out and got quotes to rent, for monthly parking, to rent a certain number of spaces. And the going rate was about $14,000 a month for all the spaces they needed. Well, it just so happened that one of their board members owned a parking lot in the area. So that particular individual put his hat in the ring to get this contract. So what happened in this example is it came up in a board meeting. The board member with the parking lot brought it up in a board meeting. He explained what his quote entailed, what the organization would get, how many parking spots, how much per month, etc. The staff of the organization already had the quotes from his competitors. And then this board member, after presenting his case, got up and left the room and recused himself from the vote. And the board members, and again, he had left the room. So the board members remaining all talked about it and came to an agreement that, you know what, his quote, the board member who left the room, his quote was market value, and the other quotes they got from his competitors were about the same price. So they went ahead and gave it to the board member. He came back into the room. They told him that he got the contract. That's an example of good fiduciary responsibility. He was acting in the best interest of the organization. It's also an example of something you'll hear about if you're a vestry member called conflict of interest. And your church may ask you to sign a conflict of interest statement that essentially says you won't do anything that will put your personal interests ahead of the organization. So in the bad fiduciary responsibility example, that was a clear conflict of interest. In the good fiduciary responsibility example, even though the gentleman was a board member and had the parking lot, it was not a conflict of interest because proper procedures were followed and the board voted on it and looked at competitive bids, and it was all done on the up and up in the right way. So in a nutshell, that's what being a good fiduciary means. It means act like you're a parent. And if you keep that in mind, you will absolutely uphold your fiduciary responsibility.
Sorry,
Okay.
go ahead.
I was actually going to ask you, Karen, if there were any questions.
There are. So
Okay.
one question, we've got a couple. One is, what is the responsibility for grants sought for and granted for an outreach ministry?
What is the fiduciary responsibility?
Mhm.
Well, typically the fiduciaries are the guiding forces to the organization. They operate up in strategy, not so much tactics. So if the vestry has said, well, yes, we want to try to obtain grants for an outreach ministry, the vestry can make that decision, but then it is going to be the boots on the ground or employees of the church that actually looks for the grants, fills out the paperwork, applies for them, make sure that they're properly executed. Is that getting to the question, Karen?
I believe so. I have
Okay.
just sent a message to the individual who posted it just to make sure that we're all in line. There's another question. Are vestry members financially liable and under what circumstances?
Super great question. So typically the nonprofit or church can get something called directors and officers insurance. And if the church has that, then vestry members are considered a director and or officer. So they would be covered under that policy for, typically it runs things like libel, slander, misleading somebody. They're covered under that policy as long as they're acting in good faith. So obviously, if a vestry member says or does something that isn't honest about the church, that D&O policy may not cover them. But as long as they are being honest to their best knowledge and responding or acting in a way that's appropriate, this is a gross generalization, but the D&O policy will cover anything that might come up.
Okay. Lisa, I just want to give you a second. I don't know if there's anything with regards to your role as the treasurer or as a vestry member with regards to your fiduciary responsibility, if there's anything that you want to share about that.
I'll just reinforce what Jackie said. Thank you, Karen. And I am the treasurer of St. George's Episcopal Church in Arlington, Virginia. So the one thing I've kind of learned as being, I'm not technically on vestry as the treasurer, but I go to every vestry meeting, so it's almost like I am on vestry. But but I'm not technically a voting member of the vestry. Just some churches do it a little differently. What I would say is, being a vestry member, the fiduciary responsibility for any board of directors, and that's ultimately what a vestry is, it lies with them. But in a church specifically, I found that there's probably even a little bit more fiduciary responsibility that is placed on the vestry, because just ministers by their very nature are, and the whole idea of being a minister is being very trusting, and they're not numbers people usually. So it tends to mean that a lot of the vestry, really the buck does stop with the vestry, and in a lot of cases it would stop with the executive director, which is ultimately the rector of your church, or if you're not in, this is the Episcopal Church Network, right? So you all have rectors. Then that's what I've noticed. I've been on other boards as well, and it's just that because the mission of the church is so critical and sort of an antithesis in some ways to financial review and making sure that you're doing things appropriately, a lot of the expertise, at least on our board, does come from the vestry members. There's a lot of lawyers who are on our vestry, just by the nature of where our parish happens to be. But that's just reinforcing, a lot of what Jackie said, is that there is fiduciary responsibility that sits with the vestry. But there's probably a little bit more even that churches need to put in related to internal controls and making sure that your fiduciary responsibility is carried out, just due to the nature of the circumstances of a church.
Okay, thank you. All right, Jackie. You're on.
Let me add one more thing to what Lisa was saying. I also think, as a vestry member, one of the best ways that you can fulfill your fiduciary responsibility is to ask questions. So the story that I love to talk about, actually true story. So some of us are old enough to remember Enron and the demise of Enron. And just to make that story really quick, what some people may not realize is that Arthur Andersen was their audit firm at the time. And I call Arthur Andersen the Titanic, because they had been the #1 audit firm in the world for decades and decades, if not hundreds of years. They were never going to sink. They were just untouchable. And obviously Arthur Andersen is not around today. Enron did in fact take them down, and they were the Titanic and they sunk. And we could talk for the next month about all the crazy accounting things that Enron did that caused their demise. And don't worry, I'm not going to bore any of you with that. But when you strip away all of those crazy accounting things that happen, you strip it all away. In my opinion, the root of the demise of Enron was that these incredibly brilliant people, meaning the Arthur Andersen people and others, sat in this room, listened to the shenanigans that Jeff Skilling was pulling, and nobody ever asked him why. Nobody ever said, I don't understand this. Why are you doing this? This doesn't make sense. Help me understand. Everyone was too embarrassed to do that. And in being too embarrassed to do that, look at what ultimately happened. So if they had spoken up earlier, and big if, they might have stopped the problems at Enron before it got to the level of destruction that it got to. And I love to tell that story because it's really as simple as saying why. And you don't have to be an accountant. You don't have to understand any GAAP or accrual or any of these big words. You just need to have common sense. That's it. And running a church budget really is no different than running your household budget. And I think everybody on this call has a household budget. They have common sense. They're logical people. Just ask questions coming from pure logic. And the other thing is that if you ask questions in an environment and anyone makes you feel stupid for asking those questions, you need to find somebody else to deal with, because no one should ever make you feel stupid or embarrassed for asking a question which fulfills your fiduciary responsibility. So that's kind of my soapbox on fiduciary. But having said that, go ahead.
I do have some more questions.
Okay.
Are you also fiduciary even though you are not a vestry member? So do you have the responsibility if you're not on vestry?
I think, so Lisa gave a great example. Lisa's the treasurer, but Lisa, you
Mhm.
said you're not on vestry, correct?
I'm
So-
not a voting member of vestry. I am an ex officio member. And I'm considered, I guess, sort of an officer of the church, even though it's a little bit odd. And they actually gave me the choice of being on vestry or not being on vestry, and I actually chose not to be on vestry because of workload, of doing the treasurer responsibility, as well as then having another committee. And so they gave me the choice. And I think some vestry members in the past, the treasurer has been on the vestry. It's been up to the treasurer to decide. I consider myself a fiduciary. I'm a signer on the bank account. So in that way, yes. But I think each parish is a little different on how they determine whether their treasurer is or is not technically on the vestry. I attend every meeting, and I also give a report at every meeting, which is more than I can say for every other vestry member, aside from the senior warden and the junior warden. But I'm not technically a voting member. And one of the reasons I also sort of like that is just because I see my role as the treasurer of kind of giving recommendations to the vestry about how they should do things. But if I'm not voting, then I feel like it gives me more of I don't have any vested interest, right? Like, so that's the way I looked at it. But really, you as a treasurer, you could be on vestry, and many parishes have it set up that way. I just specifically, for my own personal circumstances, decided that I didn't want the additional responsibility of having a committee, which is the way ours works. So every vestry member has a ministry that reports to them. I'm technically in charge of the finance ministry as is, but then there's a vestry liaison that sits on the finance committee, and that's the person who is kind of responsible for the I guess committee reporting. And so that was my choice, but I consider myself to be a fiduciary, even though I'm not technically on the vestry, and that's primarily because the financial reporting responsibility lies with me, and ultimately I'm also technically I am a signer on the bank account, which makes me a fiduciary in my mind.
Okay,
Yeah.
thank you. There's a question, do most parishes have directors and officers insurance? I don't know that we know what all parishes do, but I think that we would all encourage you to look into that if you don't have it at your parish. Let's see if this is a question. Yeah, as the treasurer, if I disagree with actions the vestry is taking and approving, how do I document those points so that so that should someone sue the church, I am not liable? Jackie, do you have any thoughts on that?
Yes, so there should be minutes of these meetings being taken. Any vestry meeting should have minutes. And so if you disagree with a decision that the vestry is making, that should absolutely be recorded in the minutes.
All right, I think we're going to jump onto fraud just to keep our conversation going. You can keep the questions coming and I'll hit on them, as we walk through the rest of the presentation. Go ahead, Jackie.
Right, so fraud is something that we don't like to think about, but I think I'm going to prove in a couple of slides why we do need to think about fraud. And fraud consists of two different types of flavors here: financial statement fraud, which you might know as cooking the books, and then stealing. And there's lots of different ways to steal. So typically in a not-for-profit, and particularly a church, the cooking the books issue isn't that prevalent. Just because you don't have lender requirements, you don't have stockholders to report to, you don't have bonuses running on how well you're financially doing. So cooking the books is a minor concern for churches. Stealing, however, can be very real for churches. And I'm going to give you some examples later of some stealing that went on I think I pulled up 3 different examples to drive home that even though you're in a church and you think the best of people, sometimes you never know what someone will do. Desperate people do desperate things. So you need to create controls and systems and processes to plan for that. So one of the things that I'm asked frequently is, why do people steal? Why do they do that? Well, so there's something that I would love to take credit for, but I didn't come up with it. It's called the fraud triangle. So people commit fraud when they have pressure, opportunity, and rationalization for it. Now, for some of you who are crime show junkies like I am, you might think means, motive, and opportunity. And essentially, yes, but for fraud, we just call it different things: pressure, opportunity, and rationalization. So pressure can be something like, I'm an employee of a church and my son has significant medical problems, racking up a huge medical bill, and I can't afford to pay the hospital and the doctors. So I have pressure to pay these people. I'm a bookkeeper at the church. I have access to all the money. And by the way, everybody, I'm totally making this up. It's not my life. It's not true. And so just this once, I might, borrow some money from the church to cover part of my son's medical bills. So that would be pressure, all those mounting medical bills. The opportunity would be the fact that I have access to the checking account. I can write a check, I can take cash out, whatever the situation is. I have access to the money. That's the opportunity. And then the rationalization in my example was, well, I just need it just this once, and I'm going to just borrow the money, but I'm going to pay it back. And typically when those kinds of situations happen, borrowing once leads to twice, leads to 3 times, and pretty soon the perpetrator is in tens of thousands, if not hundreds of thousands of dollars. So here I have my examples of frauds in parishes. These are real examples. In fact, in one of them, I actually had to pull the names out just to protect everybody here and not put names out here. But an Episcopal rector is accused of receiving a kickback of $50,000 from a vendor for illegally approving invoices for overpayment. The rector also allegedly misused the parish credit card for cash withdrawals, clothing, jewelry purchases, and expenses associated with travel for him and his family members. Example 2, an accountant for an Episcopal church was convicted of embezzling more than $175,000. He used the church's credit card to pay for Amazon purchases. He increased his salary in the payroll system, and he stole donations collected during the Sunday services. The third example, a senior warden of an Episcopal church was indicted for embezzling $89,000 from his parish by depositing church money into his various bank accounts. He used some of the stolen money to support his pizza restaurant. So there are a number of ways, as we saw illustrated, to steal from a church or any other entity. You can embezzle, which is stealing cash. Or you can do it through billing fraud. And billing fraud is, some of us saw this in, again, if you're old enough to remember, in the 90s, we experienced billing fraud. This is back when we still had photocopy machines and we used them all the time. And there was a billing fraud scam going on where, I don't know who it was, one person, group of people would bill these large companies for copy paper and toner. Now, in a large company and back in the 90s, everybody used the photocopier. You always needed toner and copy paper. And so whoever was the approver would just, well, I guess we must have got the toner and the copy paper, and they would sign off on the invoice and it would be paid. Well, it was a big scam. These people were embezzling millions of dollars a year from a lot of corporations by faking these copy paper toner bills. Yes, certainly everybody can argue with me and say, well, sometimes that was legitimate. Yes, it was, but sometimes it was also illegitimate where they were clearly stealing. So that's an example of a billing fraud. And warning signs of a billing fraud are invoices for unspecified or poorly defined services, unfamiliar vendors, vendors that only have a post office box, vendors with company names that consist only of initials, sudden increases in purchasers from one vendor, and vendor billings issued more than once a month. And it's very, very easy if somebody wanted to commit fraud. Again, I'll use myself as the sacrificial lamb. If I wanted to commit fraud, it is not difficult at all for me to make up a company name, Jackie's Company, go to a bank, open a bank account in my name, and then using Canva and all my pretty Adobe tools, create fake invoices, send them out, and the money would be put into Jackie's Company's name bank account, and I would be committing billing fraud in that way. So it's not as difficult to commit as a lot of people think it is. Common ways fraud is committed in parishes: expense reimbursements. And I think in a couple of minutes, I'm going to be quiet and let Lisa speak to this one, because expense reimbursements, and what goes hand in hand with that is using the parish credit cards, are a huge challenge for us accountants. Because what happens is the parishes will give credit cards to certain employees or vestry members to use to buy things for the parish. And then the bill comes, and it's very difficult for people like Lisa and me to get those supporting receipts for the credit card purchases. And if we're not getting supporting receipts, we can't do the proper level of review. So you saw on a couple slides before that there was an accountant at a parish that was stealing by putting his or her personal purchases on the parish credit card. This is a pervasive problem, by the way, not the stealing part, but the credit card lack of documentation. It's a pervasive problem. We see it in 98% of the nonprofits we deal with, and it is the most challenging to get under control. So having said that, I'll hand it over to Lisa, because I know she feels strongly about this as well.
Thanks, Jackie. So yes, I can say that's probably been the thing that's flummoxed the church the most. Our church has 4 full-time employees, and I think 3 of the 4 of them have a credit card. And one of the things that's probably been the most problematic is that you have to pay the credit card in advance of oftentimes getting the receipts. What we have done is we pretty much sort of, I don't want to say blindly, I look at the credit, so we get the credit card statement, and that is uploaded to bill.com, which is what we use for our payment system. And pretty much there's no supporting documentation. Then what I implemented in my parish was a secondary system that actually our minister of music set up. So there's, and I think, I can't remember the name of it, I'm sorry, but they're uploading the receipts into this separate system, because it can't be captured in bill.com once the payment has been made to the credit card company. So there's a little bit of a back and a forth, but it's a little bit challenging to handle the credit cards, I know. And in separately in other organizations that I've witnessed, what Jackie said is absolutely true. I have seen people charge their child's bouncy moon machine to the corporate credit card or a personal ski trip, and the only reason that it got stopped was because somebody questioned it. So the first thing I do when I look at the credit cards is I look at, do I recognize the vendors? Are they people we should be using? The minister of music buys, we have a children's choir who meets every week to practice, and they get pizza, right? So we're buying a lot of pizza, and then there's a reimbursement system on the back end where the parents give the pizza. But so when I see Old Dominion Pizza every single week, I know what that is for. And I've asked the various staff members if I don't know what it's for, kind of what it's for. But in the end, the receipt, the looking at the receipts is happening after the credit card approval is happening. Now, the good news is credit cards and using credit cards do give you more protections. So you can dispute transactions as long as you catch them quickly, which is, great for you personally. It also works for parishes, but you have to do it in a timely fashion. So that's kind of how we've handled credit cards. It's not perfect, but the other problem is that everyone uses credit cards for everything now. And it does give flexibility for your rector and others to be able to charge things that are appropriate. The other thing that is important if you do have a credit card is to set up limits. So that, there's a small amount of money that's allowable for them to use, but it's not, $5,000 or $10,000, so it set up reasonable limits, and then that does help to reduce some of the concerns. But credit cards are, I would agree with Jackie, they're probably the hardest thing to deal with in pretty much all the financials that I've looked at for our church.
And Lisa, I would also think that credit card fraud would be the easiest way to steal from a church. The good news is that a very limited number of people have the credit card, right? So at our church, we have a number of volunteers who just submit expense reimbursements, right? So the number of people is small, but I think it is not, knock on wood, it has not happened at our parish. But I think it would be relatively simple because it works, your church credit card works the same at the grocery store as your personal one does. And there are sometimes mixed receipts, right? So if we have a fellowship event, the rector or somebody else very well might go to Safeway as a supermarket in our area and buy, $200 worth of groceries. And it's legitimate. So sometimes those vendors are they can be personal or they can be for the parish. So there's a little bit of trust involved, but we have created a separate system to upload the receipts, so they're documented somewhere else, and we can go review them, and that's been the way we've handled it. And so, Lisa, in your example of buying $200 of groceries from Safeway, what the people should be doing, whoever's going to do that, is they should be writing on the receipt, this is for the youth picnic or whatever it was. Right. They should be putting the purpose on the Safeway receipt that they're turning in to support their credit card charge. As an aside, the IRS does require this in a for-profit business or not-for-profit that has to file a 990. The IRS expects to see credit card receipts backing up that statement. And particularly in the case of meal and entertainment type charges, they expect to see who the food was for, why you were eating it, why in this case it's a parish expense. In my example, it was a youth picnic for the youth group. That's clearly a parish expense, but that's IRS guidelines of the types of data that they want to see to support those credit cards. And then Lisa also brought up expense reimbursements, that some of their people don't have parish credit cards, but they purchase something maybe on their own credit card and they submit for expense reimbursements. You want to look for original receipts, because people can also commit fraud through expense reimbursements. So if I go out on my personal credit card and charge $100 on behalf of the parish, and I'm a fraudster, I can make a copy of that receipt, add another zero, and suddenly I'm getting reimbursed $1,000 instead of the $100 that I spent. So original receipts are critical, both for credit cards and also expense reimbursements.
Jackie, we just have a question about debit cards. Are they a good practice? And someone responded that they're worse and they shouldn't be allowed, but I don't know if you can interject a little bit more about that. Also, maybe, well, I guess you might talk about it and what can we do? So I will wait. So if you'll address the debit card question.
Yeah. So debit cards function in the same way as credit cards. I happen to think they're a little bit more risky because the debit card is reaching directly into your bank account. And oftentimes, to Lisa's point, if you report it to the bank early enough, they will make you whole. But if it slips by and you're not reporting it pretty quickly, you might suffer that loss. So, I mean, this is just my opinion. It's a stylistic thing, the way I roll. I don't use debit cards, and I don't recommend that any of my clients use debit cards. I mean, the only reason I use a debit card is to pull money out of the ATM. That's it. If I'm going to buy something, I buy it on a credit card because it offers more protection. And that's true for our clients as well as just me personally. So what can we do about fraud? Oh, I already talked about the Enron thing. Ask a lot of questions. And then here's a list of a lot of accounting things that we can do. So in the accounting world, there's something called internal controls. And for anybody on this call who's not an accountant, that may sound real scary. It's actually not. Internal controls are just setting up systems to make it more difficult for somebody to commit fraud. So for example, if I'm somebody who puts the money in the bank for the church, I should not be the person who can also write the checks and pay the bills for the church. That's called a bad segregation of duties. So if at all possible, the person who puts the money in should be separate from the person who covers the expenses, should be separate from the person who reconciles the bank account at the end of every month. That's an internal control. Because those duties are split between 3 people, it makes it more difficult for any one of them to steal money. Not impossible, but more difficult. Closing the books in a reasonable amount of time is a huge internal control. So what that means is when January 31st comes, ideally, the parishes should have financial statements no later than February 20th. And if each parish is also setting up a budget, you can have a budget to actual reports. So you can see how you're performing relative to how you thought you'd be performing. And again, that's what we call a mitigating control for fraud. Because if somebody, if I've got the credit card and I'm charging a whole heck of a lot of money to Tiffany's to buy myself diamond rings, and it hasn't been caught yet, certainly on this budget to actual, I also call it a budget variance report, it's going to stick out like a sore thumb because it got buried in office supplies, and suddenly the vestry's seeing, wait, we should have spent $5,000 on office supplies, but we've spent $50,000. What happened? And that's a great example of the average everyday question that even a non-accountant can think to ask. How did it go from 5,000 to 50,000? Oh, well, there's all my Tiffany's charges on there because I'm stealing. That's how it happened. So closing the books and having that budget variance report, digitizing the accounting process, which means a lot of different things. But Lisa brought up a really good example. Her church uses an application called bill.com, which is similar to ADP. And she and I love it for all the same reasons. And I love it so much, I always have to qualify and say, we don't get any commissions by talking about bill.com. We make no money off of this. I just love the product that much. That one of the things it does is, if any of you are familiar with ADP, it works kind of the same way. I decide I'm going to pay 5 bills this month in the amount of $1,000 each. So I put that into bill.com. I put the bills into bill.com. It's an online application. Lisa's an approver, so I can't pay anything until Lisa approves that bill. And the way I put the bill into bill.com is I sent the bill to the inbox, a PDF of the bill. Artificial intelligence goes to work and fills out all of the data entry forms for me. I go in and I double check it because artificial intelligence isn't perfect. When I've checked it and it's in there correctly, Lisa gets a notification. There's something in there for her to approve. She approves it or not. And she can look at the backup. She can look at the invoice because it's right in there. And then when she approves it, then I or somebody else can go in and pay it. So in my initial example, when I pay 5 $1,000 bills for a total of $5,000, Bill.com takes $5,000 out of the church bank account, and then Bill.com on their own bank account divvies up that $5,000 amongst the 5 different vendors. So now the church bank accounts, routing, account number, the types of data that thieves need to wipe you out is no longer out there in the ether. It's the Bill.com routing number and account numbers and so forth that are out there in the universe. So it's a great way to protect your church. It's also great because, as I love to say, you don't have to chase people around to get their approvals. Lisa could be on a beach in Tahiti approving my bills for me. So it facilitates the payment process as well. You definitely, another thing you can do is, again, make sure you reconcile those bank statements every single month. Reconcile those bank statements. Analyze AR. Now in churches, you probably have pledges. So you'd want to look at your pledges and see if there's anything that's outstanding and looks unusual. One of the things I find churches are really good at is they'll send pledge statements to their parishioners. That is a great control, because if I'm pocketing money, if Karen pays her pledge and I'm the one processing it and I pocket it, and she gets a statement that shows she hasn't paid her pledge, she's going to be getting on the phone and going, wait a minute, I sent a check in for that. How come it's not reflecting on my statement? So that's another great thing that you can do to mitigate fraud. And if you have hourly people, timesheets should absolutely be reviewed and approved before it's paid. Payroll fraud, we saw a couple of slides back. That's another easy way to commit fraud in a church if the right controls aren't in place. If I'm the one doing payroll and nobody's checking over my shoulder, I could give myself a $40,000 a year raise or more, and it potentially would not get caught. Another thing I want to bring to your attention here is we're seeing a lot more of this kind of fraud. Be careful of the ACHs. In fact, actually, Karen, I experienced that today with one of our employees. By the way, they did not get away with fraud, but I got an email from my direct supervisor saying to me, hey, I want to change my direct deposit information on payroll. How do I do this? So that's how sophisticated the crimes are getting. It did not come from her. And I could tell that because I looked at the email and the email address was wrong. So what this fraudster was doing is somehow they became aware that I report to this person. They send me the email. I would guess if I had responded, they would have sent me a new bank account and routing number and expected me to change it in the payroll system. And then my supervisor wouldn't have gotten paid. Again, none of that happened. I realized it was fraud. I sent a note to our IT people, my supervisor, everybody and their brother, and let them know this is going on. So it didn't happen. But we're seeing that more and more frequently with our clients, that type of fraud. The other type of fraud we're seeing, which did happen to a church that we know of, is that they were doing some construction on their church. They had done a capital campaign. They had raised a few $100,000 for this capital campaign. And they got an email from their contractor saying, hey, you owe me $200,000 upfront for this contract. I changed my mind. Don't send me a check. Wire me the money. And in fact, that was a fraud. So unfortunately, the church had not engaged with us yet, and they didn't check the email address. They didn't call the vendor and say, hey, are you trying to get paid by wire now? They did none of that. They actually made the payment. And anyway, the thief got a couple $100,000 in cash that they shouldn't have. So be aware of these ACH scams. We talked a little bit about expense reimbursement, looking for original documentation. And Karen, I'll throw it back to you if there are any questions.
So, just a note on the contribution statements. I didn't mention this, but in my past life, I worked for a large Episcopal parish, and what we would do is on the actual statement when we sent it out, because I was the one that was posting the contributions. When the statements went out, the note said, if you have, if you want to tell us about anything that, does not look correct on your statement, please contact X person at this email address. And it was not me. So that way, again, if I was committing fraud, all of a sudden this other individual would be getting all the issues and questions might pop up. So internal controls are key to all of it. So we at Chazin Company do offer outsourced accounting services for nonprofits exclusively, and that is what we do day in and day out. And so if you feel that your parish, now that you're listening to all this, may not have enough capacity to be able to make sure that certain internal controls are in place, we can fill those gaps. We can complement teams, we can do full accounting, whatever your need might be. So I'm happy to have a conversation with you. It is free. I don't bill hourly for my work. So I'm happy to learn about your challenges and see if it's something we can help you with. So the information is here for that.
Karen, let me interject just really quickly as well, that we also have a service where we can help identify those gaps in internal controls. The assessment can help do that as well. So if all of this is just confusing you and going, oh my gosh, I have no idea if we have the right internal controls set up, we can help you with that.
Yeah, we can also perform assessments to review your policies, procedures, systems, and staff, and kind of put a roadmap for you. You can either engage with us after we do the assessment, we can help you with that, or you can take that roadmap and work with your vestry and implement those on your own. There is a question that has popped up. We are bumping up to the 4 o'clock hour. We will stay on and continue to answer questions. So feel free, excuse me, to continue to submit your questions. But there is a question with regards to rector discretionary accounts. All that says is, can you address rector discretionary accounts? I'm not sure outside of anything you might be thinking of from a fraud standpoint, Jackie or Lisa, what else they're looking for in this question.
Well, I can address what we did at St. George's, which is we actually shut them down. And the reason was because there wasn't transparency on what was being paid out of those funds. And what we decided to do was put any money in the rector discretionary fund. We have a kind of a temporarily restricted accounts section of our financial statements, which is called the altar and special funds. And we basically were taking contributions, because there are contributions that our parishioners give to the rector, for the rector to use mostly for people who are in large personal needs. So somebody has got cancer, lost their job, whatever, and they're having a hard time financially. That's mostly what our rector discretionary accounts had been for. And basically we run them through bill.com, and ultimately they get approved by the senior warden and myself are the approvers. So it's still a pretty tight circle of who can see it, but the rector discretionary bank account that used to exist got closed into the operating account. So it didn't have as much ability to have any internal controls, kind of, and our own rector was not terribly comfortable with the arrangement. So I discussed it with her, and we decided to close it. She still has discretion over who gets the money, but she doesn't physically have a checkbook that is, a separate rector discretionary account. So it really depends upon what you feel comfortable with. I wasn't terribly comfortable with it, nor was the rector. So we just decided to handle it the way we handle all the other payments, but she has complete discretion over who is getting the money. Often what we do as well is rather than paying an individual money, we are paying to their landlord, or we'll pay the Pepco bill directly. We'll pay, I know we've paid storage costs as well, which also allows some privacy and confidentiality to you, who you're actually helping. So that is one way of kind of getting around, you know, I think the largest issue is people not necessarily wanting other than the director to know who's having personal struggles, but that's how we've dealt with it, and it seems to have not had any issues or problems. It's still a very tight circle of people who see these reimbursements, but there's just more transparency on how it's being paid for. And it honestly was a relief to our rector. She didn't want to have to keep track of this separate checkbook, and didn't really want to deal with writing the checks either. So it took some of the administrative burden out of her hands, and she was happy with it. So it is a little bit of a delicate conversation, but that's what I would recommend, and that's what we did at my parish when I became treasurer, just because those accounts were kind of hanging out there. And there wasn't a lot of money in them, but there seemed to be a lot of work related to not a lot of money. And we just thought it would be easier to handle it that way. So we've been doing it this way for 3.5 years, and I've never heard a complaint or a problem about handling it that way. So that's what I would recommend. And that's what we did with ours.
And Lisa, you can still budget for it. You can
absolutely
budget, say the rector's going to have $10,000, whatever the number is, in discretionary funding.
That's right.
You just don't need a separate bank account with checks and all that.
That's right. That's exactly what we do. We tend to get donations to offset the rector discretionary fund, and we count it as a temporarily restricted fund so we can keep the balance going from year to year. So we tend to not actually put a whole lot of that in our operating budget because our parish is pretty generous with that. But there is a small amount that is still in the parish budget just in case for some year. But it's very rarely used because there's enough donations for that purpose that we haven't needed to do it. But you absolutely can keep it in your operating budget. Part of the reason we don't want it in the operating budget is there's a little bit more. We do send financial reports to the vestry on a monthly basis, and that activity that is in the operating budget does have a little bit more scrutiny than the stuff that's in the altar and special funds, which for personal needs you probably wouldn't want a lot of scrutiny there. But as I said, we try and make sure that we're not paying the individual, which also adds a layer of confidentiality, because when you're paying Pepco or Virginia Power or, you know, a landlord, you don't know that it's for, you know, Jackie who's falling on hard times. You just know you're paying a Pepco bill for whatever you're paying.
And that speaks to a question about how do you maintain privacy, and that's exactly how you do it, is you pay vendors directly instead of just giving money to the individual. I think we have time for one more question, and I think, Jackie, this one might go to you. What do you do if you only have one office manager? Any written or internal control frameworks you can give advice on that?
Yes. If you only have one office manager, presumably, Karen, I'm thinking, who's having to do all the accounting, the deposits, the payables, all that. So somebody should review the bank reconciliation every month in detail that office manager is doing. I would also encourage whoever reviews it to actually sign off on it to indicate that it's been reviewed every single month. And the point that this person asking the question is making is they may not have the budget to properly segregate duties. So it's got to be one person doing it all. Secondly, the second thing is getting those monthly financial reports against budget that will help with internal controls if you only have one person. Thirdly, two things that are really small. Anybody else who's employed there can receive the mail and then write down the checks that came in the mail, or anybody else who works there can take the deposit that maybe the office manager prepared, but take it to the bank and stop the office manager from taking it to the bank. So those are a few quick and easy things you can do to mitigate your risks.
Absolutely. Also the use of volunteers, if you have any that are, you know, willing to help, that's always great. We had the Sunday counting, counting countesses, we called them. The countesses are here. They would come on Monday and they would count. So you always, you know, can take advantage of that. So thank
And in
you all.
teams,
Go ahead.
Karen, in teams too.
Yes.
If
Oh,
you-
absolutely. You need to have more than
In
one
teams.
person so you
Mhm.
can, yeah.
Mhm.
So thank you all. It is 4 o'clock, so I want to you know, honor your time. Thank you, Lisa, for being a guest with us today and sharing some of your insight. And thank you to EPN for having us today. And I will be in Houston, so hopefully I will get to see some of you there. Stop by the booth and say hi. Thank you.
Thank you.